Okay, so I'm actually based out of our corporate headquarters in Shenzhen. I've been with Huawei for 15 years. As you can tell from my name, I have some German background. As you can tell from my accent, I'm an American. So yeah, it's quite the polyglot setup here for you. What I'd like to talk about today is really some of the things that we've learned, some of the things that we're seeing that are driving the transformation, that are having an effect on the financial institutions. So first of all, I think the thing to look at is the fact that the way that our customers are transforming in how they deal with things. So if we look at going from, what in China right now is very passé, which is scanning a QR code to pay for things, right? It actually is not very old from a technology standpoint, but it's really was a precursor for a lot of the things that are taking place. We now have quite a lot of places, particularly in China. We're also seeing this in Singapore and some other financial hubs where people are using facial recognition. Now, this is one of those areas that is very much around regulation and cultural things. A number of years ago, I was giving some tours through our exhibition hall in China, where Huawei has never done facial recognition, but we have partners who use our technology that have done that. And we had a demonstration of the use of facial recognition to be able to identify people that were, doing things that they shouldn't be doing. And I had a group from Germany that I was giving this tour, and they looked at this demonstration, and they all went, "Oh my God, that's illegal." So there are a lot of different areas to look at here. But I think the point is that the effort is to make it as simple as possible to be able to handle your normal day-to-day transactions. Try to make them as frictionless as possible. And so now what we're seeing is that the role of the mobile kinds of applications is really expanding. So it starts out just, I want to do payments, I can use QR codes or whatever, but it's now been expanded to, this is how I should communicate with my financial institutions. I can do some live streaming. Why should I go on to a social media app to communicate with people? Or why can't I just do it within the mobile application? And this is being enabled by new technologies like 5G, which is rolling out quite widely now. Almost all the phones you would buy today would be able to support this. And as a result, we now have new areas that are being looked at, and we'll talk a little bit about central bank digital currencies. Just from an example from China, one of the focuses was, historically, a lot of the banks in China were very focused around giving services and loans to state-owned enterprises, right? It's very safe. You loan them money, they will pay it back because the government will step in and pay you if they don't. And so, but with the growth of fintechs and the change in structure to being much more of a consumer-driven economy, the banks really needed to transform to be able to support the new kinds of services, because if they didn't, then even the traditional services that are offered by the banks are starting to be under pressure. And we're seeing that the role of fintechs has been to really put pressure on traditional financial institutions to force them to change, to force them to make things easier for their customers. And the final role or goal of these transformations is to become fully digital businesses. And that requires rethinking your customers' journeys and not putting your process complexities into your customer, being able to focus around that change. And so what we saw is the role of these fintechs really very quickly changed from we just want to, and so within the financial services arena in various, particularly Asian countries, but even we're seeing it in some of the emerging economies in Africa, in Latin America, is that the role of the bank is changing because they're being pushed by fintechs in different areas. And the way that this is really showing up is in the area of creating ecosystems, being able to harness through open APIs lots of connections to other kinds of services. So, why should I take my mobile and have to open up the Starbucks application when I want to get a mocha latte or whatever? Why can't I just, within the same application that I'm using for my financial services, just automatically do that? And maybe I can get a better discount that way. As a consumer, I don't have to be searching all over through various screens on my mobile device. I can just stay within that. The advantage is that this super app technology gives the whoever is offering it the information about everything I do within my life, right? Even if it doesn't involve an actual payment. And so the ability to harness the data, as Philip talked about, is really important because it allows you to create new kinds of offerings. It allows you to offer new kinds of services. You can start, as Philip mentioned, one of the challenges with small businesses is not an established credit history. So one of the things, if you're able to capture all of the transactions, all of the information that these small businesses are doing, now you have the basis to be able to offer credit. We have one of our mobile money customers in Africa did exactly this by focusing an AI-based model based on all of the transactional information, and they opened up entirely new markets of being able to offer lending services to small businesses that never had access to the financial services before. So the role is to really focus around becoming payments platforms, being able to offer new kinds of services. Now, in the case of China, this actually got a little bit ahead of itself. The fintechs got out ahead that, in general, there's two kinds of regulatory environments. One is, which is a permissive one, which is you can do everything anything except what I tell you can't. And another one is, the more restrictive is you can only do what I tell you can do. And in China, it was a very loose environment for a long time, which was, go ahead and try it. And then the regulator has to come in later and try to clean that up. So there are definitely challenges around this as well. And one of the big ones was around the Know Your Customer, which is a challenge in almost all environments where the regulator requires that you really be very careful about where you're accepting money and transactions. So one of the customers that we've dealt with a lot, this is an example of the transformation that they went through. So they started out in 2014 and essentially turned the bank around from a standpoint of focusing around normal kinds of banking transactions. They said, okay, what we're going to do is we're going to focus totally around the monthly active users, which is a Facebook, a Google kind of a metric, because what it does is it measures the engagement of people. How often, how many people are using your application on a routine basis. And when you use that as your metric, then you have to build an environment where people want to be using your application, and so you have to build this kind of an ecosystem. And so that's what they did. But what they found also is that they needed to change the user journey. So I mentioned earlier, rather than just put a mobile front end on processes you already have, turn your head around and focus around what is the customer trying to accomplish, and based on that, design a process and implement the process. If that means changing lots of your internal processes, even your internal organizations, then that's the right thing to do, because it focuses around making the customer experience more and more sticky. And then as part of that, you will find that you have to do, as Philip mentioned, change your organizationals. Either from the standpoint of how they deal with each other, they're breaking down internal silos, or how you focus the relationship between your IT organizations and the rest of the business to create much more of a cohesion, to create much more of a team kind of an environment. So these are the steps that they went through, and the results actually spoke for themselves. But and one of the things I think that people don't really appreciate as much is, as you go towards mobile, it's not just about taking my internet-based application for banking and putting a mobile front end around it. That's what an awful lot of banks have been doing. But what they need to do is to be able to move to much more of a mobile-centric environment, to be able to utilize existing technologies, but to be able to make them responsive, to make them able to react to the kinds of loads you're going to see from mobile applications, and be able to capture the data from all of the data that you're getting out of these mobile applications. And in order to be able to react as quickly as possible, the mobile side of that equation needs to be using new technologies. And Philip was mentioning that, focus around emerging technologies, focus around leading technologies. And here, this really is around cloud computing, microservices, those kinds of things, because you need that kind of ability to rapidly bring out new services to be able to support this ecosystem that we mentioned before. And so you don't have to get rid of your existing infrastructure. I think one of the keys is to think about how you can take your legacy environment and transition to take the key pieces that are focused around mobile and use new kinds of technologies to be able to do that. And then, but keep your legacy environment intact for the things that it is best at doing. So it's not an either or. You need to be able to do both of them. And so this is, just to summarize again, when you have this ecosystem kind of an environment where you're getting all of this kinds of information, it provides you data not only to be able to do things like have new kinds of marketing programs or new kinds of loan programs for small businesses, but also to substantially improve your risk assessment, your risk management, and even to improve the quality of the services you deliver, because you're measuring an awful lot more things. You can see a lot more things that are not operating the way that they were supposed to. And so, and in addition, this also offers you the opportunity to be able to come up with new kinds of services. So once you are collecting this kind of data, you can see, oh, well, now I should be able to offer a new kind of a wealth management product, and who I can offer it to. Because now you can do much more aligned marketing. You can do the kinds of risk assessment I mentioned, as well as the marketing programs. So there's lots of new kinds of opportunities that are brought out once you're capturing this kind of data. And as I mentioned before, the focus around being able to have your processes really match the needs of the customers, and by digitizing all of the experiences. I mean, if one of the key steps is they have to physically go someplace, you probably have not succeeded, right? So everything needs to be digital, and you need to figure out how to do that, whether or not it's a combination of things like facial recognition for your know your customer, whether it's liveness kinds of uses of the mobile, where the application makes sure there's a live person there, not just your picture. All of these kinds of things become very, very important for the digital experience. And now I just want to spend a couple of minutes talking about what's kind of coming next. There's a lot of discussion about digital currencies, cryptocurrencies, the NFTs, those sorts of things, and certainly we've seen over the last few weeks that cryptocurrencies may not particularly be a store of value as they were thought to be. But the central bank digital currencies really, I believe, have a future. I think it's one of the things that you should be thinking about as you look at the going forward. What happens when your regulator gets involved in offering digital currencies, and how are you going to be able to integrate those within your processes? And finally, so this is the different kinds of opportunities that may come out of this. Again, based on your regulator, whether or not you're allowed or your own bank or financial institution is interested in getting involved in crypto assets. But from a central bank digital currency, everybody at some point in the future is need to deal with this, because it is the way to handle digital transactions moving forward. The other technologies, and this is my last slide, to keep an eye on is the growth of devices and electric vehicles, that kind of thing, because these devices, these Internet of Things kinds of activities are going to become more and more important in the transformation of payment systems. Just a simple example is that your autonomous driving electric vehicle goes and charges itself and needs to pay for that, right? But more interesting ones are the Internet of Things, where sensors are driving the supply chain charging. There are new kinds of opportunities in supply chain financing that come out of that, not of new capabilities. And a lot of these derive from the kinds of bandwidth and number of devices that are supported under 5G. And of course, cloud is going to be the backbone for all of this, whether it's in your own data center running as a private cloud or as a public cloud, or as we're seeing much more and more, the hybrid cloud, where you're using some private, some public, and of course, probably multiple public kinds of clouds. So with that, I'm going to wrap up, and I think that the key message is that we're seeing a lot of digital transformation in the area. It's being driven by mobile, it's being driven by cloud, and the ability to harness huge amounts of data and be able to create new kinds of services, new kinds of offerings, and large ecosystems as a result of that. So thank you very much.